Welcome back to America's Commercial Real Estate Show. I am Michael Bull. And this segment is brought to you by getvaluate.com. Check it out. It's online investment analysis. And today we are talking about retail. And retail has gone through a lot of changes. Everyone knows about it. But one of the things that I think is interesting is, how do you deal with tenants who are maybe struggling? How do you check out tenants today? I mean, if everything's more about the experience and everything's more about what they're doing online, we have new concepts that we want to integrate with our national credit tenants. So I have an expert here with us in studio today, Nick Grazia, and he's Director of Leasing with Hines. And Nick, thanks for joining us today.
Glad to be here, Michael. Thank you for having me back.
So, yeah, I'm curious, you're handling a lot of tenants at Atlantic Station, where you have a mixed-use development with a lot of great tenants. It's a great development in Atlanta, and you're helping Hines make these decisions on tenants and how to deal with these tenants. So first of all, how are tenants doing today? Because we were talking earlier, it's in the press, everything's doom and gloom. But how are tenants doing overall around the country and in retail today and in your place?
Well, I don't think it's as bad as people make it out to be nationally. Yeah. And hopefully the press will write a lot of positive stories as retail kind of reinvents itself and makes a general type of comeback.
No, they're not. It's going to be negative.
Right. But I think it's all over the board, and I think your A and better properties continue to lead and lease up, and they continue to be desirable places for people and tenants to want to be. I think anything less than, say, a B plus single-use mall is going to have to kind of reinvent itself. But you're starting to see a lot of people that have been 100% online starting to open up stores. And they've got a lot of data, so they know where their customers are at, not just in a general market, but in kind of a micro market, literally by zip code, by street. So they're aiming a lot of their decisions, based on the huge amount of data that they have. So that's a dynamic that really hasn't been in retail for a very, very long time, and is kind of throwing a little bit of a curveball to traditional landlords. But overall, I would say that it's not as bad as people make it out to be. And if you've got the experience part right, I think tenants are going to follow that.
Yeah. Well, what do you do as a landlord to help some of these retail tenants? I own one retail center, and about every quarter I'll do something to help them, and I'll send out a mailer to the market area or do something like that. What are some tips for landlords if they want to try to help their retail tenants?
Well, not every tenant is going to hit it out of the park, obviously. Yeah. But one thing we do at Hines, and particularly down at Atlantic Station, a very, very active social media program. We will work with the tenants, and that's not an extra charge. It's just part of being, part of being a tenant in one of our centers. Facebook, Instagram, Twitter, when they've got sales, when they've got new merchandise, when they just want to get the word out again about an event or whatever happening at the store. That's a service that we do provide to them, and we found that over the years, as normal advertising has kind of waned and the social media has taken off, you get a whole lot more engagement of their whatever store it may be, whatever restaurant it may be, who their core customer is, by aiming down that way.
Okay. And how do you check out tenants today, Nick? It's gone are the days where everyone did well, right?
Right.
And as I talked about in the opening, I guess you want to have some tenants that are kind of new in the mix, right? There may be younger startups and things like that, maybe chef-driven restaurants that aren't chains. So how do you check out your tenants today?
If it's a national tenant, Michael, I think it's pretty easy. They've got X number of stores. You press a button on the internet and know everything you want to know about them from a financial sense. I think with respect to local or somebody kind of emerging, the quality of their website can really tell you a lot about what you need to know, the care and craft they put into it. That's part of the experience as well. That's, I think, how a lot of customers discover unique brands or restaurants really first. Secondly, and I never really put a lot of credence in this, but Yelp comments, particularly on the food side. If somebody's going to go and create a profile and email and everything like that and give somebody a 1 to 5 star rating, that passion, I think, says a lot about the type of experience that person had. And so you see a lot of 1 stars, and it's probably something you're going to kind of veer away from. 3, 4, 5 stars, yeah, I think it's something that you're going to want to kind of grow with, but sometimes you get some angry people in there and it can skew the results. But then overall, I think, particularly at Hines, we've got a very broad and diverse staff, age, gender, and getting a mix of opinions about a restaurant, about a retailer. And me being, a 47-year-old male, I may look at a store differently than a 25-year-old female. So getting the opinion of other people thrown in the mix is very, very important.
Yeah, and when you have one of these maybe local tenants, Nick, are you looking at the tenant a little more as if maybe you're an investor in the deal, right? That who are your customers? How are you reaching them?
Right.
Are you looking at social media, what they do there? Are you looking at what they do for online as well?
All of the above,
okay.
Yes. And I think you hit the nail on the head. You become an investor in them. And all great retailers, I had an old mentor tell me, every great retailer started off with one store someplace, okay? So Crate and Barrel, whoever it may be, had one store somewhere. So kind of seeing through whatever's out there to that potential and what it means to your property, I think that's more art than science, quite frankly. And I think that there's almost too much information out there sometimes soon. So if you can just kind of boil it down to what needs you're meeting in your property, I think that's a positive thing. I think one of the things that has hurt the mall REITs over the years is all the malls for the most part look the same, and the retailers and the REITs grew in a very, very kind of concurrent way throughout the 80s and 90s. With the advent of the internet, I don't think it's so much about taking sales away from what used to be in store to now that's going to be online. It's the mall REITs and the specialty retailers decided what was cool. Okay, now with the internet, they don't need that medium anymore, and it's kind of the shoes on the other foot, and they've kind of flipped that equation. So they can find out who their customers are by being online, then place their stores where their customers are. So the model has been really turned upside down.
Yeah, it's kind of interesting, but back in the day, it seemed like a more straightforward, and now you kind of look at a tenant and say, well, tell me what you're doing online, and let me see your social media presence too, right? I would assume that if a tenant
number of followers, right?
Yeah, if their social media is just terrible, you're like, well, what's wrong with you?
True, and then particularly in food, okay, a Zagat rating or your Yelp score, things like that, I think say a lot about the quality of an operator.
Okay. And Nick, let's talk about some ideas when a tenant comes to you and they say they're struggling, they're struggling with their numbers, and they ask you for help. They ask for a rent reduction or whatever it is they ask for. What are some things that you might do in that case?
Like I said before, you never bat 1,000, okay? And not everybody's going to hit it out of the park. I kind of put it, if that were to come around, I kind of put the tenant in one of two categories. Are you the tenant that's generating traffic for the shopping center, or are you the beneficiary of all the traffic that is being generated from the shopping center?
I like that as a starting point.
Right. I think the other thing you got to kind of evaluate is this a chain of 800 or 1,000 stores or a chain of 10? Because if you want to grow with that concept in your other properties, you may want to think about giving them some help. One of the things I've done is when somebody does come to me, and it's unfortunate when somebody does come to you, I say, all right, you can cut the rent, but landlord has a right to take your space back. Because if I don't want them there, number one, if they're not drawing traffic, and number two, if their sales productivity is weak, they're weighing down the center.
Right.
So I'll help out somebody with a little bit of rent relief, and it doesn't happen all the time, but landlord will get a right to take the space back and recapture that. That recently happened down at Atlantic Station on a very underproductive food use, and I did cut somebody's rent, and I was able to find a replacement tenant in about 75 days or so.
Yeah, and I think that's important, and I see some landlords that don't do that. They give a tenant some sort of relief, and they get nothing in return. And it'd be nice to have that flexibility. So hey, if you're struggling, then maybe you relieving the tenant of that burden is what you can do.
Yeah,
putting a new tenant in.
Personally, I don't like to hurt people. Okay,
Right.
but if, like I said, if it's a chain of 800 or 1,000 stores and somebody's not quite hitting it out of the park, 18, 19, 20% occupancy, that blends in with a bigger corporation. Okay,
Yeah.
but if you see a chain struggling nationwide, okay, and their sales are down everywhere, you need to start thinking a little bit more further down the road. It's like, are these guys going to make it? And when we do get the keys back, what are we going to do with the space?
Yeah. Do you also, Nick, look at if they're asking you to see, hey, is this a problem for the center, or is it really a problem with the tenant's operations?
Sometimes that happens, particularly on the franchise side of things. You can get a great concept, but if you've got a weak operator, it's just not going to work. Sometimes you get people just with a lot of money burning a hole in their pocket, and they want to, buy a franchise, whether it be casual food or fashion or something like that, and they just think, you pay somebody 12, 15 bucks an hour to run a store for you. Retail is not for the faint of heart. It really isn't. Running restaurants is not for the faint of heart, and it requires a deep, deep commitment. And the people that do it well, they live it 24 hours a day. So who's running the store, I think, is very, very important and an often underestimated factor in that decision.
Yeah, it's interesting. I had a tenant recently that asked me for a rent reduction from a client, and I would spend some time in the store and saw their salespeople making some very big mistakes. And and I think part of the problem there is I think the franchisor is concerned if they do too much training with this employee that maybe the employee becomes a tenant of the franchisor.
Right. I've seen that happen in kind of a broad sense where you get a franchisee who's actually running the franchise better than the franchisor kind of standardizes everybody else to do so. They kind of become a thorn in their side, and they're not operating per the agreement. Yet the cash register's ringing, sales per square foot, so landlord's happy about that, yet they're getting their wrists slapped. So, but with a lot of better run national chains and whatnot, I think that if you get the right operator, things tend to work well. But quite frankly, I've seen in the past, particularly in the casual food world, a lot of franchisors are more interested in generating fees than they are really in running restaurants, and those are the people you got to kind of avoid.
Yeah, and do you find some of these franchisors, if a franchisee tenant's having a problem, that the franchisor may want to come in and take over the store and resell it to another operator?
I definitely prefer that. We structure that in all our leases, and giving them the right to do so. The franchisee just can't sell it to anybody. It would have to go back to the franchisor. If somebody can come in and sharpen the operation, whether it be staffing, whether it be product, that's something landlords, at least in my experience, we've always kind of encouraged.
Yeah. Are you seeing anything else that's kind of trending, Nick, as far as lease negotiations go, that some of these tenants are looking for in their leases that may have changed over the years?
Insurance has become more of a heavily negotiated issue recently. A lot of my experience prior to joining the Hines was just in the single-use mall world. And so many of those national tenants, Michael, had standard leases with Simon, with General Growth, two people I've worked for in the past. So it's not something I ever really had to work out. Now, working for Hines, particularly down at Atlantic Station, number one, it's a mixed-use environment, and there's factors in a mixed-use environment that don't play into a mall. Apartments or offices leaking into your space below, and you've got public streets as opposed to private roads and whatnot. So there's a lot of things that particularly national tenants don't understand. I would say maybe that's not the right choice of words,
they're
but
not used to seeing all the time.
They're not used to, because so many of their leases are in single type properties.
Right.
So that's become more of an issue. And then I think, and I've tried, and I haven't been really successful at it though, is getting in a 0.5% of online sales, but everybody's kind of pushing back at that. Even local people, like a great local boutique that may have a decent online presence, trying to even capture 1% of their online
Get
presence.
percentage rent on it? Yeah.
Exactly. Everybody's really pushed back hard on that as well.
Yeah. Yeah, well, it's interesting because, some of your tenants are becoming just showrooms, right?
The good ones are doing, I think, are balancing it, yes.
Yeah.
Okay. I think we move beyond just a box for people to come and pick up goods in. I think footprints are getting a little bit smaller with people, and they're maximizing what they can do in them. And you can press a button if they don't have the item in the store and it's on your front step the next morning. So I think that will be a trend down the road, is people getting a little bit smaller, not needing as much GLA in these centers.
Yeah. And what's the particular issue with insurance that tenants are having?
A lot of them don't like to go to the standard that we want them to go to.
Of the coverage levels?
Correct, yes.
Okay.
And again, in a mixed-use environment, you've got people living there, you've got people working there, you've got, particularly at Atlantic Station, we do 300 public events every year, everything from Cirque du Soleil and the Atlanta tennis tournament to yoga in the park. So there's a whole lot more chance for something out of the normal to kind of happen. So, and just getting people on board with that, I find has been a little bit tougher. But it's not an easy discussion, but ultimately at the end of the day, I think they kind of start to see the light.
Yeah. Do you see retail owners and asset managers as compared to office asset managers and owners related to how they handle tenant reps? Coming from Hines, that I kind of know of as an office owner, and then having retail, seems like a lot of the large office owners are are very receptive and really work well with tenant reps and take care of us and
Right.
welcome us and work well with us. But I see some retail landlords that aren't as happy to work with tenant reps. What do you see? What do you recommend?
I think it's a balance, and I think the office world has always been about that, having brokers, outside brokers, bringing landlords, tenants. In the national retail world, your chain type retail, apparel, home furnishings, most of those companies have a national director of real estate. And in 22 years in this business, I've built up a lot of relationships. And while I prefer to work directly with the person at the company, they're the decision maker. At the end of the day, they're the tenant. But once you get outside of that mall world, a lot of these chains do hire street brokers, so to speak, because it's not as easily understandable as a mall with 4 or 5 anchors and a bunch of co-tenancy. So mixed use by nature has been one of the drivers of breaking up kind of that mall map system of just not having the same type of tenants. So when you get a national tenant who wants to kind of explore that route, they do hire a local broker. We've always worked well with local brokers and want to embrace that community and want to tell our story. And sometimes when a tenant hears it from somebody who lives there, particularly in the market, they're more likely to believe it than a true landlord rep. So I think it's worked out well for us.
Yeah, I just had a recent experience with a pretty large landlord that didn't treat a tenant very well on renewal, didn't treat me very well as the street broker, and I don't think I'll ever bring that landlord a tenant. And I think if the tenant's looking at it, I'm going to suggest that they stay away from that landlord. So I think it's interesting as tables turn to landlord to tenant markets, how that works, and I think you always really want to embrace. And I like that new. I not heard that term. I guess now I'm a street broker. I like that. Nick, great information as usual. Thank you for joining us.
I greatly appreciate it. Thank you for having me.
And thank you for joining us. Now stay with us. We'll have more on retail. I'm Michael Bull. This is America's Commercial Real Estate Show. Stay with us.